May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the US dollar index. All right. First thing that needs to be mentioned tensions in the Middle East, US, Israel, Iran. The Ayatollah has been killed, missiles flying. It's bad. It's just bad. But what happens in relation to what we're doing here, what happens is during times like this, when missiles start flying, safe havens are being ran to. All right. And the US dollar is one of them. I expect the US dollar to make some gains during the time of this conflict. All right. It may be short term, it may be long term. We don't know yet. We got to see how it goes. But right now, I'm thinking that you're going to see a boost in the US dollar in the short term. All right. In the near term, I should say. All right. Now, look on the monthly, you can see it's been bullish. I've been pointing this out for several months now. Right. And we're in a ascending channel, and these the higher low that breaks uh, structure to the upside, and then the pullback for another higher low to make another higher high, breaking structure. Right, this is the potential higher low for the next structure break, or for the next uh, higher high. All right, so we have that. We have all of that as a potential. Okay, and I've been, because we're in this ascending channel, that you're able to mark it out pretty easy. Okay, now as far as February, bullish month, inside month. What does that mean? An inside bar. This is a bearish candle for the month of January, and this is February. February is bullish, but it did not take out the high or low of the previous monthly candle. What does this mean? What we can expect? Watch. Let me say this: the inside candle represents contraction. It represents consolidation. The next candle should be an expansion candle. That's what we expect. And because there are tensions, and because we are located at the support line of this ascending channel, all things being considered, it looks like we're likely headed upward in this market. And I'm looking for the market to make some gains from these levels. Okay. That's it. That's basically it. All right. So you see how we gapped up here. This is the new week opening candle right now. The new week opening candle. Well, the new also the new month opening candle, and you see there's a big gap up. All right. You see that we're heading up, folks, and that's all. That's all you need to know, really. All right. All right. On the weekly, you can see last week it was a bullish close. No, excuse me. 2 weeks ago was a bullish close above a down candle. Boom. We have the inside week here, an inside week. All right. I just showed you that we had an inside month, but this is an inside week. I'm expecting expansion to the upside, and you can see that gap, the new weekly open gap right there, is about to push things up towards these highs. We're going to hit. We have a couple of weekly targets here. Can I get you to act right? Can I get you to act right? I don't understand what the problem is here. All right. So I'm looking at two targets: the consolidation high here, and this past weekly candle here. I'm looking at those to be the bullish targets, the buy side liquidity. That's what I'm looking at. All right. Now, if we go to the daily, you can see, like I was talking about uh, last week, that um, let me get some markers here. So you see the bullish, the impulsive move to the downside, and creating this area of fair value, right? The market came back to mitigate that area of fair value, didn't it? It pulled up, it pulled back, and you can see that the this high protected this high. This is the low. Sorry, this low was remain protected. We have price moving back into that low, which is a fair value gap here. All right. Let me get rid of some of these lines so you can see it. All right. You can see the fair value gap here, right? The market moves inside of it here. Doesn't just shows it respect, and then prices push higher. All right. Past what? This bearish fair value gap here. All right. Now, what happens is once price closed above that, there was the potential for the market to invert it. All right. Invert this fair value gap to an inverted fair value gap, where we, instead of it being used for resistance, it can now be used as support. All right. And you can see the market is respecting it. All right. It has not closed past that inverted fair value gap. All right. And if we go down to the 4 hour, you can see. All right. If I can clean this up a little bit, you can see. All right. You can see that we have a wedge pattern forming here. Right. And what does that mean? Come on, man. Why you do that in front of people? All right. You can see a wedge pattern forming here with the market doing all of this. All right. Kind of look like it's winding, coiling, right, for an explosive move or breakout. All right. I'm looking for that breakout to happen to the upside. And I gave you the reasons why, with the the tensions and all. But this pattern looks like a pennant forming. All right, a pennant is a bullish continuation pattern, and we'll look for the move up higher. And I pointed out last week that because there's an area of supply up here, and we have a move here, and the market takes that higher. We can see that we can use this as inducement. All right, inducement, a liquidity point that the market could target and then come back. And now we have relative equal highs here for the market to come and take out to mitigate this area of supply. All right. Now, once it gets up here, we'll reassess because the market could continue up higher. We'll see what happens once the market makes contact with that POI. But right now, it looks like the market is heading up higher. As you can see, this is the new daily opening. This is the the new the new opening for the week right here, and you can see there's a nice huge gap up. Look for price to maybe pull back a little bit, and then we can start hitting these targets that I already pointed out, and we can head up towards this high here, which is at the bearish the bearish order block up here. This is an order block, all right, and it looks like that it will be the draw on liquidity. Okay, all right. Now, so here we go. This is it. All right, this is quite a gap. I'm going to mark this gap for you here. Boom, boom. That's a volume imbalance, or otherwise known as a liquidity void. All right. That's on the 4 hour. So, yeah, buys. All right. What does this mean? What it means is uh, if you're trading the other major pairs, New Zealand dollar, US dollar, Aussie dollar, US dollar, Euro, US dollar, Pound, US dollar, US dollar CAD, US dollar Swiss, and US dollar JPY or the yen, you want to trade accordingly because you know money. Uh, this is a safe haven. Now, up against other safe havens like the Japanese yen and the Swiss franc, you have to look at that chart real careful. All right, and the Aussie dollar is very very strong, but it also in a risk off environment, it starts to move downward, and this is a risk off environment. All right, when there's tensions, nobody wants to put money in. Um, in the stock markets and whatnot. They want to put their money into safe havens. They're going to take their money out of the stock market and put it in safe havens, put it in the bonds. And if there's more money going into bonds, more investment going into bonds, that's going to push the US dollar higher. Anyway, I will see you in the next video. Thank you for watching. May profits be upon you.